Welcome to the Daily Brief, where I'll go over the highlights in the market for Friday, September 16th, and then briefly go through the high points for how things look for Monday, September 19th. And the 3,900 area that we were hoping might give us some support, we just blew through that. So things are pretty negative right now. So what happened on Friday? We did gap lower, and most of the loss that we saw in Friday's session really came in the overnight session. We gapped lower and then just could not get back higher during the daily session. We gapped below S1 at 38.73, and we went all the way down to S2 at 38.45. As the day went on, we kind of bounced between S2 and S1, but we could not break back above that. So going into the close, we closed at about S1. We ended up being down 0.72%, not a really strong down day, but still a negative day. And we fell through that 3,900 level. Volume was way above average because it was options expiration. And the technicals, yeah, they're negative. There's some positive things that I bring out in the full length video. It may be the formation on the daily chart where we have a down bar with a gap, but then we close near the high for the session on that bar. That might give some kind of support to the market. But if you're looking at all the different indicators that we have, all the oscillators, there's one oscillator that's positive, but all the rest of them are negative. We're below all the moving averages. So overall, the market is in a real negative state right now because of inflation and interest rates. We do have the Fed that will be meeting this week. They start on Tuesday. They'll make their announcement on Wednesday. And that's what the markets are really fixated on right now. So what are some comments? It was options expiration. That explains the huge spike in volume. We were below 3,900 with the S&P. We have three yield curves that remain inverted, the 30-year to the 5-year, the 10 to the 2-year, and the 10 to the 5-year yield. Sentiment, we dropped a little bit with the down day, but we're not necessarily extreme right now. The only economic report that came out was consumer sentiment. It came in at 59.5. They expected it to be at 60. After getting down to 50, this is actually showing some improvement. And that's probably having to do with the lowering of gas prices. And not much else that folks can really hang on to right now. Our trend is negative and it's below 20. So we're kind of in a trendless environment. But the red line's on top, and if we see more downside movement, that ADX could come back above 20, which would put us in a negative trend. Our bias is negative with the down day, and the last number of days have overall been negative. So our momentum is negative too. So what's our outlook for Monday? We're negative right now. We have the NAHB Housing Market Index coming out, the whole list of geopolitical events that are not having a direct major influence on the market other than inflation and interest rates. During this week, there'll be lots of Fed speak that comes out and a change in their possible change in their policy. Fed Chair Powell they'll make the announcement and then the market will freak out, and then there'll be a press conference and the market will freak out over that. So we'll just have to see how things go. Our scenarios, we could go with the down scenario because of all the headwinds that are hitting the market, and the technicals are pretty decidedly negative. The only positive thing right now is that potential closing at the high after we really gapped lower. Sometimes that can be positive, but we need to see follow through on price for that. And our technicals, you can't really look at those because we're below the moving averages. We've dropped below pivots. We're dropping below retracements. And so the market's just having a real difficult time right now. You could go with the sideways scenario because the ADX is below 20. But if we have another down day, that might change into a fully blown downtrend. So our conclusion, not really hard to say right here. We're negative across the board right now. So thank you. If you want a further discussion and lots of charts to back up what I'm saying, please look at the full length video. Have a great weekend. I will be posting the weekly video and the intermarket analysis video.